No, in fact, I think that core inflation is a major concern for India because it tends to be a bit sticky in the downward direction. And what we have seen is that even last year when food inflation was high, core inflation has been inching upwards. We have been in the range of around 5%. And the thing about core inflation is that once it goes up, it is denoted to what we call the MRP, the maximum retail price of various products and services. And once these prices increase, they never tend to come down, even after there is a correction which takes place in the economy. So therefore, I think the major concern for the central bank and also for all of us out here is that core inflation will continue to be sticky and will be inching upwards. So while the headline inflation number could be influenced more by food prices, which are more seasonal in nature, so there could be some kind of tempering of the food inflation number, which can probably keep the overall inflation number in the region of around 4.5%, 5% at the best of times, 5.5% at the worst of times. But we should remember in India, we have seen that it's almost a habit. Every year in the months of around October, we see the prices of onions and tomatoes increasing because of the monsoon staying for longer, which really leads to a fair amount of chaos in the food economy, and the food prices tend to shoot up at that point of time. So therefore, we are still looking at inflation in the region of around 5 to 5.5%, which may be within the realm of the Monetary Policy Committee's range of 4 to 6%, but definitely doesn't give any comfort if you are looking out for interest rate cuts.
Okay, so that's the inflationary outlook. Let's take this in consideration with what's going on with growth. I mean, Goldman Sachs seems to agree with the OECD that on a full year 2022 basis, they're looking at 9.9%. But on a quarterly basis for Q2, Goldman expects a 27.6% annual contraction in India for the second quarter GDP figure. Do you think that's realistic?
So, in fact, when we are looking at GDP growth, we are at CARE Ratings. We have an estimate of 8.8 to 9% after the numbers which came out yesterday. Now, we had seen that the fourth quarter number at 1.6% was positive, which gave us a signal that maybe the economy was coming out of the slump which was there in the first two quarters and the slight revival which we saw in the third quarter. Now, with the lockdowns which are there, we think that going ahead, the economy will tend to slow down. And the numbers which we get for the first quarter of fiscal 22, that is for the quarter ending June, will be very much misleading. It's going to be a very high number. We haven't yet calculated the exact thing, but my sense is that it will be in the region of around 20%. But it will not give you that kind of comfort of positive growth taking place because it comes over a negative base rate. We had a very sharp decline because economy had actually come to a standstill in April and May of last year. So the numbers should be taken with a pinch of salt. We should not look at them very seriously, look at it more from the point of view of the full year, where I said we are looking at something like 8.8 to 9%.